How's it going, everyone? For today's video, I'm going to be covering bar plays. We're going to look at 3 and 4 bar plays, bullish and bearish, for continuations. The first example here is going to show them that form in between supply and demand zones. The second example is going to be on chart pattern breakouts for continuations. And the third example is going to be 3 bar plays that happen at market open with high volume. Those should move your option contracts well. So let's get into the first example here. We have a bearish 3 bar play, a bearish 4 bar play, and a bullish 3 bar play. To have a 3 bar play, the first thing you need to identify is an igniting candle. So a long candle in some direction, whether it's a long green candle to the upside or a long red candle to the downside. Second thing you need to identify is a dividing bar or dividing bars. So for a 3 bar play, it would just be 1 dividing bar. And for a 4 bar play, you would have 2 dividing bars. The criteria that the dividing bars must meet is that they do not exceed, the close of the candle cannot exceed a 50% retracement of the igniting candle. So we see here for this first example, it meets the criteria. It's green, but it does not close above 50% retracement. So then you look to play the continuation to the downside on this breakout candle. So there's a bearish 3 bar play setup. Then moving over, this time it's a 4 bar play. You have your igniting candle to the downside, your 2 green dividing bars to the upside. This higher wick went above a 50% retracement, but you see the candle did not close above a 50% retracement. So it's a valid setup, and you would look to short it and play this breakout candle to the downside. As you can see in both of these examples, both breakouts continued more than just the breakout candle. So in some scenarios, you can let your runners go for extra profits, or you can potentially just re-enter after taking profits on the breakout candle. It doesn't always happen. Sometimes after the breakout candle, we quickly get a reversal back to the upside. So you just have to manage that properly and use your indicators to help you manage your positions there. And then one last example, this one is a bullish bar play. We bounce in demand here. This is a great high probability setup. We have the dividing bar. And what I like about this dividing bar is it has a large upper wick. That's the direction we're looking to play this 3 bar play to. So it shows you that buyers were trying to move the price up before this candle's close. So then you get in on the breakout candle here, scalp that to the upside. Again, it does continue a little bit past the initial breakout. So manage your position how you'd like. Some indicators that could have went along with all of these trades. For the bearish bar play, we have rising bearish volume, TTM showing buying momentum leaving the market, selling momentum gaining control, and we have the bearish MACD cross, all giving bearish confluence that this bearish 3 bar play will break out to the downside and potentially have some continuation. Again, bearish 3 bar play, this one not as high probability on the confluences, so maybe you don't take this one, just watch it play out. And then here for the reversal though, we do have bullish MACD cross and rising bullish volume, and it was bouncing in a demand zone. You can see the demand zone formed with support bounce here, here, and here. So this would be the 4th time forming this nice demand zone. And then also back to this first one, I forgot to mention, we had a supply zone across here, rejection, 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 all these rejections. And then this is a break below that supply headed back down to demand. So that's our first example. Second example, we're looking at bar plays that form after chart pattern breakouts. So to start the morning, we had this nice divergence play, and we start moving back upward, chart plotting lower lows, and RSI plotting higher lows. I will have a video coming out soon going over divergence, bullish and bearish, so keep an eye out for that. Nonetheless, we had this pennant pattern that formed on the breakout. Nice This would be your igniting candle. It was the breakout on this 3-bar play setup. And then we have another 4-bar play setup. Large green candle, 2 red candles that do not close below 50% retracement, breakout candle. Then it forms another one. So you had 3-bar plays in a row, a 3-bar play, 4-bar play, another 3-bar play with lots of continuation. So that was your bar plays on the pennant pattern breakout. Some confluence to go along with it, the divergence that I already mentioned, bullish MACD cross, buying momentum re-entering and taking control, and rising bullish volume. Lots of confluence to go along with each of those bar plays. Moving over, we have this descending broadening wedge pattern. Chart it with the lower highs and lower lows here for each of those trend lines. The first one happened here on the breakout of the pattern. So your large igniting candle, 2 dividing candles, and the breakout candle. Continuation. And then we form another 4-bar play, breakout candle. We could have rode that back up to above the high of day. Confluence to go along with those, bouncing off the oversold level of the RSI, bullish MACD cross, buying momentum re-entering and taking control again, and rising bullish volume again. And here, for the last example, we're looking at bar plays that happen at open. So you have this nice, just continuous uptrend, buying momentum, just steady gaining control, and just you can see an uptrend here on the RSI with higher lows, higher highs. Right at open, we had the igniting candle, your dividing candle, breakout candle. Right at open, that one would have moved very nicely for your option contracts, considering your opening is the highest volume of the day, open and close. And then straight from that, we form another 3-bar play. Igniting candle, dividing candle, breakout candle. So you could have scalped both of those. And this is an example where I say we don't always get the continuation. So make sure, you practice scalping this pattern and not always looking to go long and day trade it. And some indicators that could have pointed to that was how high up we were on the RSI in the overbought level, MACD curling for the bearish cross setup, buying momentum was very high and overextended on the TTM, and we had decreasing bullish volume. So all that could point to the fact that this wouldn't continue and you would not want to stay in that position too long. Just get your profits and get out. So hope all this was helpful. I know I kind of rushed through some of this, but review it. Drop any questions you have in the comment section, and I will definitely get back to you on that. And keep an eye out for my next video on divergence trading.